What is going on? Welcome back to the channel. Today we're going to talk to you about Oscar Health. I want to go over some of the current data points and a major warning that investors need to be aware of. Before we get into any of that, make sure you guys hit that thumbs up. And with that, let's get right to it. Starting off at the time of doing this video, it is down 4.1%, 13.05 the low, 13.97 the high. And you are seeing a lot of volume today. So 49 million shares being traded, 30 is the average. But if we do look at both the secondary market and also the dark pool, you're seeing a lot of transactions on the dark pool. So if we kind of piece everything together, it goes to show that hedge funds are actually the culprit on why it is going down. So hedge funds are essentially selling. Even looking at the secondary market, you do see some strings of selling right here. So everything that does show as a bid essentially is a sell. So smaller players are selling as well, but still not a good scenario. Overall, when it comes down to it, it is down 9.87% over the last 5 days. So when it comes down to any kind of momentum stock that you need capital to get in, as soon as that kind of gets pulled, you get this type of price action. And then when it comes to also shorts, I like to always analyze what they do because it does kind of paint a picture. But essentially, at the time doing this video, shorts are increasing 756,000 shares, 22.61% of the free float is being shorted, works out to be 46.6 million shares overall being shorted. So ultimately, when it comes down to shorts, they have doubled down, and actually, in fact, they've tripled down, because roughly end of May, it was 8%. That's what the short interest was. So they have been massively increasing. They did that initially because Oscar Health started to really gain some momentum. So they started to really double down to suppress it, more on a technical standpoint. But they did realize, even though it started to go down, they realized that they can continue to short it and dictate pretty much where it's going. So today is kind of the worst case scenario, because you do have both institutional investors selling and shorts increasing. So not a good recipe overall. And at the end of the day, there's also been a lot of stupid ratings that's been coming out, such as there was one 3 days ago, Jonathan, UBS, who has a 61% success rating, did give a $11 price target. You also have a 14, 10, 9, 17. So not good overall over the last 3 months. $12.42 is that price target, representing a 6.41% downside. So even if we do look forward into the next couple of earnings, which right now it is estimated for August the 7th to be the earnings date, even looking forward aside from that one, you see a lot of kind of good growth. Couple of quarters anticipated to be somewhat negative, but you're seeing some solid double-digit growth, but not in the same magnitude and consistency that investors would truly like. So I think in reality, this does have a lot of good potential. I personally did invest, and I still did. I'll show you guys my kind of holdings in a second, but I think just a lot of influencers on social media instantly are saying, hey, this is going to go to 100, this is going to go to 150, just hyping up it more than what it should have been. So I think that already laid the foundation for kind of instant failure. And then you had shorts and institutions just kind of using retail as exit liquidity, which is kind of even worse. But aside from that, looking at the options, 18 million in calls, 23 million in puts, 49% of all the options being done are bearish in nature. So there's more downside anticipated based on this. From the bulls, you see a consensus for it to be roughly around that 14 to 1450. Bears are anticipating for it to surprisingly be between that 11 and 1150 next week. So there's a lot more downside anticipated based on that. But one thing I wanted to kind of signal as a potential warning is this right here. So with it right now at 1329, it is trading between this S2 and this S3. And I did signal this in my last video, which was, I think, 3 or 4 days ago, that if this 1357 was to be broken, then essentially you can anticipate this $10 to be touched, that general range. So on a technical standpoint, it is breaking, which is rather weird, because based on the cash that they have, it should be roughly around that kind of $9 range at the very bare minimum for our book value. But still, like shorts, institutions, all really pushing, suppressing the price. This is the crap you get. So ideally, it does close above 1357 today, thus kind of causing a little bit more of a technical recovery, at least in the short term, but still things are not good coming from that standpoint. Aside from all of that fun stuff though, these are kind of what my holdings are. So I have 3,700 shares now, average of 1512. And so yeah, I'm down about 6,700, 12% roughly. I did do quite a lot of options as I've shared. So I have roughly about 1,500 in premiums that is expiring today. I've been selling a lot of puts. I did sell some calls as well, just to kind of bring some additional funding in. So I think it's not all that bad, but still I don't think anyone anticipated this crazy of a pullback. On the actual chart itself though, so with it right now where it is at that 1329, it has completely broken below all the key pivotal moving averages. So the 50, 100, 200-day moving averages. Because of everything though, it is very oversold. So a good piece of news, if that does come out, you'll see a very nice recovery. But moral of the story is you need a good piece of news. And I think Oscar Health, the last news that did come out was in June, mid-June, if I remember correctly. So June the 18th. So everything that has happened since then has been speculation, hype, and just more macro events that's been really kind of plaguing it. So at the end of the day, I do feel if it does not get above that 57 level, then it will be pulling back. So 1357, just watch for that, which is rather unfortunate because I did feel that there is a lot of good potential with this stock. I don't agree with a lot of the pumpers, as what people call them, I guess. That is going to go to like 50, 100. I think realistically 30 might be kind of a good price point, which, as I've mentioned in my Patreon, is where I feel long term it should go. But it is, I didn't anticipate this level of volatility straight out the gate. So turns out this is going to be another fun, heavily shorted stock. So let me know your general thoughts. And actually looks like just in between doing this video, they did jump up another 1 million. So now they're shorting 1.74 million shares as of today. So let me know your thoughts on this stock. Have you been buying? Have you been selling? What have you been doing behind the scenes? And do you think that we will potentially get to that $10 range? I did sell a lot of $8 and also $10 strike puts. So if somehow, for whatever reason, it does get to that price point, I'll be buying more shares, almost tripling my position. But if it doesn't, then I get to keep the premiums. So that should bring in some kind of additional funding and kind of erase my losses. But still, it's rather frustrating. Let me know your thoughts. Don't forget to hit that thumbs up. One final thing though, pop over to my Patreon if you are looking for some solid buy signals on stocks, options, crypto, many of which have been absolutely on point and bangers. Definitely worthwhile to pop over there and take a look. With all that said, appreciate all of you watching.